So welcome traders. My name is Sean Kozak. I am the CEO of Tickblaze. I'm head of development and system architecture with our R&D teams. And I have my entire team here today. I've got Jim, head of education, Pete, head of ops. I got Jeffrey, my lead trade room educator. We've come together today to launch a very strategic software tool set, as you will, into the Tickblaze platform. This is not an algo. For those of you that have been to any of our algo webinars, this is a full-blown trading software package. We're going to talk about what it's designed to do, why it's valuable, why we would even entertain discussing it. Just for those of you that are joining us for the first time, we record these webinars. We'll send you guys out a recording after the event. We do allow time for Q&A at the end of the presentation. And ultimately, we're going to go over a lot today. We're going to go over conceptual theory. We're going to go over trading systems. We're going to go over exact rules. We're going to go over the trading strategies used by the banks. And we'll back that up with evidence and what they're doing and why they're doing it, et cetera. And we're going to talk a little bit about that here today. But welcome to anybody that's new. Now, market profile is very different than volume profile. And the whole focus of our software is automating auction splitting. Automating auction splitting cannot be done with volume. It can only be done with time. And this is actually the trading system that the banks use. I know that's a pretty bold statement, but we're going to actually explain why that's a true fact and where that came to be and how automated auction theory actually came and, you know, the origins of it, et cetera, et cetera. But the goal here is to show you that this is literally like 10 trading systems in one. This is literally, it's like buying 10 indicators in one. It serves multiple purposes. And if I'm able to give a little bit of a backstory here, you know, I've been trading for a very long time. I've educated tens of thousands of traders. I've been known to be, you know, somewhat of a systems architect. And it wasn't until I learned market profile that I actually felt I had my pulse on the market, right? Like there's a lot of traders that don't really know what's going on in the market. They get up, they turn on their screens, they look at what they're doing, but they truly don't really feel like they understand what's happening. And it wasn't until market profile that I actually knew that anytime I looked at a chart or anytime I actually looked at the market, that I could literally within minutes tell you exactly what the auctions are doing, exactly where the banks are looking to buy and sell, exactly the stance on price versus cheap and expensive locations. And my hopes today is that I can help every single one of you guys learn what has shaped me and many other very, very experienced traders. Okay. Does that sound like a plan? Give me a yes if that makes sense to you guys. You're in for a good webinar and we're going to get ready to rock and roll. Fantastic. Okay. Let's do it. So obviously this is a trading educational event. I'm not here to guarantee results and I can't do that, right? Nor would I ever pretend to. I'm here to educate, provide context, software services, tool sets, etc. But if you are trading, please note that I can't guarantee anything and nobody else can either. So past performance never guarantees future results. And if you could do me a favor and just type a Y in the chat box that everybody here understands, has read, and accepts the disclaimer, that way we can move forward like professionals. Yes? Great. Great. It's important, guys. We're in the business of money, and I'm not here to give you false hopes. Fantastic. So my promise to you today is very simple. I'm not here to show you any shiny objects. This is not a shiny object webinar, okay? This is truly an edge that if you learn this, if you actually devote a little bit of your life to learning what I'm about to share with you today, it will change you. It will change the way you trade scalping strategies. It will change the way you trade algos. It will change the way in which you read the market. It will mold you into a professional trader. Why? Because this is literally not just a trading system. This is understanding what the market's actually doing, right? You'll be able to take what we're doing today and what I'm showing you with this software, and you will put it on your chart, and there will never be a day where you never have to guess what is the market doing? Why is it doing what it's doing? Why did the market reverse there? Why is it trending there? Why is it stopping there? There is a lot that I'm about to share with you today that cannot be done, okay? Cannot be done with other tools. This is not something that can be done with standard indicators. This cannot be something that is done with, momentum oscillators or supply and demand level. That none of that stuff is going to cut it here in this discussion. Okay. And so what's important is that I've been doing this for a very long time, and I'm going to keep it super, super simple, right? If you Google market profile, or if you try to go and learn from some people that have taught this stuff before, I promise you're going to fall asleep and you're going to get confused and it's going to be overwhelming. My job today here is very simple, that I am going to make it super simple for you to be able to learn these major concepts and implement them immediately. Why? Because I'm not going to go over a bunch of stuff that's not relevant. I'm only going to talk about the stuff that you actually need to focus on and why. Okay, there's a reason for it. And that is the only thing I care about today, is going into the meat. Everything else you can figure out later when you have more time. I'm going to just simplify it down 10 years in literally less than 2 hours. Okay, are you guys okay with that? Unless you want me to go overly complicated and talk about stuff and your eyes roll over backwards. We know that that's not what you want. Now, I'm going to talk a little bit first before I get into the presentation, and that when you trade and you get stopped out, it's because you're on the wrong side of the market. There's nothing wrong about that. That's just, you've just misread the market, right? Now, there is sometimes a variable where, hey, just volatility creeps up and you get low ticked or high ticked. And that's going to happen in trading, guys. If it hasn't happened to you, I promise you it will. So get ready. But the majority of traders, okay, are not understanding why the market's going against them. Like, that's just true fact, guys. Like, if you're long and then all of a sudden you get stopped out and the market goes short, like, you didn't read the market properly. It's not that you're a failure. It's not that you don't have the ability to become a great trader. It's that your read on the market was not accurate. That's all there is. Okay. It isn't some, oh, they're out to get my stops, or it's us as traders are not interpreting the information properly. Now, what we're going to do today is we're going to fix this. It's not something that you can just chalk up and say, oh, I'm destined to failure. Everybody can learn this, okay? And I'm going to unpack exactly how, right? You don't need to fully understand what's going on up until today, because moving forward, you will. You will be able to look at a chart, and I will be able to tell you within 2 minutes or less what side the market is going to be most favorable to trade, where the banks are going to place their positions, why the reversals are happening where they're happening, and what you can expect from the auction. Okay. If you're not able to tell me that in less than 2 minutes, you don't actually understand what's going on with the market. Market profile will do this for you, and that's exactly what today's presentation is going to do. Plus, I'm going to give you an entire trading system, a whole cheat sheet for trades that you can trade immediately using this software. Okay. Now, the first thing I want to talk about is market profile versus volume profile. They are nothing of the same, literally nothing. Okay. A lot of times people hear the word profile and they say, oh, yeah, I know volume. This is not a volume profile webinar. Okay. We're going to talk about splitting profiles. This is the secret to trading auction theory. Okay, we're going to talk about our secret. We have a proprietary splitting algorithm that took years to build. And what it does is it allows us to identify shifting auctions so that you're never on the wrong side of a market that's moving. We're going to talk about that today. We're going to talk about the profile patterns. We're going to talk about the difference between multi-timeframe auction theory. We're going to go through the demos on the charts. I've prepared some notes for you guys that you guys can take with you today, and you can take a screenshot. We're going to talk about different strategies around profile arbitrage. We're going to talk about TPO trend trades. We're going to talk about auction splitting VWAPs, not the normal VWAPs. These are VWAPs that are relative to the auction. We're going to talk about single prints. We will be giving away a free license to people today. And then we have a very special promo. We also have some additional coupons for anybody that has ever taken advantage of any of our other market profile software on other platforms. Okay. And then after that, we'll go over a Q&A. Does that sound like a pretty good breakdown, guys? Give me a yes if that makes sense to you, and we're ready to rock and roll. Lots to cover. This is a big event. This is a big one. Okay. This is a real big one. Good. So first, let me just kind of give you a disclaimer. Market profile was not created by me or anybody in my company. Market profile was created by a gentleman in the 80s by the name of Peter Seidlmeier. Okay. He was a CBOT member. And they built this type of trading analysis to be able to bring into the institutions. This was not built for retail traders. So let me repeat myself. This is actually a strategy and a software tool set that is used by banks. There's a reason for it, okay, is that they needed to be able to identify where they can do business and when, and why they can do business in those locations. This is not volume profile. Volume profile comes after, okay, profile auction theory. Volume profile is always after market profile. Let me explain why. Market profile is always used for splitting time. Once the banks identify where they can do business and why based off of the auction theory, that's when volume transacts. Volume is always the footprint of the market after they've already made their decisions to do things in an auction. So let me repeat myself. This is very, very important. TPO stands for time price opportunity, also known as market profile. Banks use market profile first to identify where they need to do business and why. Then they exchange business by facilitating trade, which then creates the volume profile, which everybody looks at after. So if you think about it, volume profile technically is lagging to market profile. And the reason why most people don't understand market profile is 90% of the platforms out there don't do it properly because they don't have automated auction splitting. And we're going to talk about this today. Now, this is a profile strategy used by banks, and we're going to talk about why. Okay. Banks rely on historical volume to build positions, and they move a lot of money around, but they can't actually do it all in one location. That would create a very, very unhealthy auction. So they build positions over time. But what ends up happening is they need to know where they need to do business and at what time that business can be facilitated at. The market profile is to locate when, why, and where. Okay, so let me repeat myself. Market profile is to locate when, why, and where. Then volume profile is formed based off of the executed volume that transacts based off market profile decisions. This is the untold story. This is what a lot of retail traders don't understand. Okay, how many of you guys knew that? How many of you guys knew that market profile is what drives volume profile theory? Did anybody teach you this? Sharpshooter, yes, you're an experienced trader. Couple people, yes. Market profile leads volume auctions. Okay, this is very, very important. Why? Because if you're looking at volume profile, you're only looking at a third of the story. And we're going to talk about how to get the entire full picture here today. Okay. And when I say banks are using this, this is actually what banks use to make big trading decisions, because banks aren't trading on very small time frames, and they normally go down intraday on 30-minute auctions. You're going to wonder why the 30-minute chart is so important today. We're going to talk about it. The 30-minute chart is the most used time frame intraday by banks. It has to do with not volume, it has to do with the little letters inside of these blocks. It has a lot to do with these letters. Everybody can do their ABCs, right? A to Z, okay? There's a certain amount of letters in an alphabet, and when you divide those numbers by 30, it gives you an equal incrementation that market profile can be defined. This is how profile software is created. And therefore, there's a reason the 30-minute auctions are used to create an even system for letter placements inside of the alphabet. Now, we're not going to get into some quantum physics here. Like, we're going to just tell you why that's happening. Just trust me, that's how it's built. And we're going to get into that here. Like I said, we're going to keep it super simple, and we're going to show you how it looks on a chart. Okay. Now, let's go into here and take a look at the next slide. So market profile and volume profile are not the same. Okay. Volume profile measures volume. Market profile measures time. Oranges and apples. I like to use the analogy oranges and apples. Why? Because oranges and apples are both fruit. So they're both in the same category, but they're very different. An orange is an orange and an apple is an apple. Yes? So when you think about it, they're both in the category of fruit. So they're both considered auction theory concepts, but they're very different. Okay. And they are both using statistical analysis, which means there's a mathematical component to why these strategies have merit. One of the things I like about auction theory is that it's not about my belief system. It's not about whether or not I think the indicator is going to work better or not. Mathematics is mathematics, statistics are statistics. And when you understand that there's a rhyme and a rhythm to the market, and there's a mathematical rhythm statistically to why things are happening, you're going to start to really believe in why you're looking at this information, because it builds intent. If you sit there and you put a bunch of indicators on your charts and you're like, well, I hope this works today, and well, maybe that's going to do it for me now, that's just you shooting at the hip. But if you throw statistics at the market and you actually put a mathematical context to the information, there's evidence that proves what's actually happening is valid. And we're going to get into that today because it has everything to do with why this type of trading methodology trumps everything in the existence of trading, right? There's a reason banks use it over just basic indicators, okay? Now, when we look at auctions, whether you're looking at a market profile or a volume profile, you're going to hear common terms, okay? You're going to hear the term the value area. You're going to hear the term the value area high. You're going to hear the term the value area low. You're also going to hear the term point of control, and you're going to hear the term VWAP. These are terms used to describe parts of the auction. And what's unique about this is that both volume profile and market profile exchange that terminology. So you're not having to learn something new here when it comes to profiles, but just know this, that there is ultimately the same type of conversation that you'll have when you're looking at a volume profile or a market profile. The concept is that when you turn, when I take this, okay, this image, I look at that and I'm like, well, I have no way to make sense of that. Like, how the hell can I trade that? That makes no sense to me, right? And I said, I'm going to make things easier. Well, you don't need to trade the market like this. This is used for statistics classes teaching in university. When you turn it to a chart and you look at it like this, and I look at it in a chart like this, and I break down an auction and prices going like this, okay? What I'm doing is I'm saying, okay, there is an area in here that determines value. And now I can determine statistically, based on mathematics, where the market is going to be cheap or expensive. And this is the most important job of a trader. Your job as a trader is to identify where the market is cheap and where it is expensive, because our job is to place trades. And if you buy, you think the market is cheap. Why? Because buyers buy the market thinking it's going up. Whenever you press the buy button, what you're saying is, I think the market's cheap. I don't think you've ever thought of it like that. When you hit the buy market or buy limit, you're saying the market's cheap. And because of that decision, you want the market to go up because that's how you make money. When you hit the sell button, you're saying the market is expensive. Your interpretation of the trade activity at that time, your anticipation is the market's going to go down. What you're saying psychologically, and you don't know this yet, is that you're saying that the market is either cheap or expensive every single time you buy or sell. And therefore, unless your read on the market is actually accurate, you will not make money on the trade. Does this make sense to traders? My job here today is to show you every single day at any given time how to properly understand if what you're looking at is actually accurate. Is your interpretation of cheap actually cheap? Is your interpretation of expensive actually expensive? If you're looking at it backwards, you're going to lose money. Now, this is just concepts. We're going to talk about locations. We're going to talk about examples. But the whole point of this is that I am going to take statistical analysis, flip it on its head, and then bring it onto a chart. And I'm going to show you how banks look at auction theory. Okay. Now, when you look at the market, there's going to be two different views. In volume profile, you're going to hear the terms high volume nodes and low volume nodes. High volume nodes are where the market transacts a lot of volume. Low volume nodes are where the market doesn't have a lot of volume, normally considered thin pockets. In time, it's different. In time, it's called high time nodes. And in auction theory, you have low time nodes. Now, often low time and low volume will overlap, or high time and high volume will overlap, but not always. And when the volume and the time do not overlap on an equal basis, there's what we consider arbitrage. And this is the secret. When you have time and volume not identically aligning in a proper auction, you have discrepancies that can be exploited for very, very, very profitable and highly probable trade locations. What most people don't understand is that arbitrage is there every single day. You're just not identifying it. Okay. And what I'm going to do, Thomas says, you explain it so much better than Staudomeyer's boring book. Thanks, Thomas. Appreciate it. Well, it's just years of trying to keep it simple and talking to traders, right? Like that's the goal. Okay. So does everybody understand that there's going to be an overlap of time and volume, but when they're not equally aligned, there's going to be a concept called arbitrage. Arbitrage is a distance. And here's the thing, arbitrage exists in many different types of trading. Like there's buy spread arbitrage. You see arbitrage. If you go and get Bitcoin on Binance and then you go buy Bitcoin on Kraken, maybe you get a 2-cent arbitrage on the spread. Like there's HFT algorithms out there that run arbitrage. There's high frequency institutional quant funds that literally their entire alpha fund is based on exploiting arbitrage. Institutions exploit arbitrage because it's very, very, very powerful stuff. And I'm going to teach it to you as a retail trader today because we've developed software that's going to show you where it is. Okay. Now, this is one of my most favorite things to teach traders. And I'm going to explain why, because this is what changed me as a trader. So this is one of those slides where if you weren't listening to me through this whole presentation, now's the time to perk up, grab some coffee, whatever you got to do, put water on your face. But this is the slide that is really, really, really important. Okay. Whenever we look at a profile pattern, and this is equally true for both market profile and volume profile. Okay. You will have 3 different shapes. There will never be 4. There will never be 5. There will never be 6. There will never be 2. There will never be 1. There will always be 3 because there is only 3 states that the market can ever be in. And what we're going to do is we're going to talk about why this is the key to you understanding profiles. Okay. In a D-shaped distribution, okay, D-shape, this is considered an auction that is balanced. In a P shape, when a market is shifting P, this is an uptrend. In a B-shaped distribution, this is a downtrend. In a D-shaped auction, this is an oscillating market. So there's a sense where the market is never trending down, trending up, or going sideways. The problem when looking at it from a chart perspective, when you look at it on a 5-minute chart or a 15-minute chart or a 30-minute chart or an hourly chart or whatever, a Renko chart, the problem with using just charts is that you never know where the banks are viewing the market as cheap or expensive. So let me give you an example. If I'm in an uptrend, in this entire trend, if I say, show me where it's cheap, you can't. You cannot tell me where the uptrend is actually cheap. You can say it's in an uptrend. You can say, oh, there's a pullback. You can say, oh, we can see there's a trend line, but you cannot tell me where the trend is cheap. There is always a very, very finite answer. You cannot, if you are just looking at this structure drawing and you're not looking at profiles, and I sat 1,000 traders down and all they did was look at that squiggly line because that's what's on their chart. If I say, if I give you $1 million and you can show me where it's cheap, if you do not have an auction on your chart, you cannot tell me where the banks view it as cheap. Same thing in a downtrend. If I'm looking at it like this and I say, show me where the downtrend is expensive, and you're not looking at an auction, you cannot physically tell me where the banks view that trend as cheap or expensive. You might get lucky trading a pullback to an EMA. You might get fortunate and trade whatever you trade, but you're not actually able to speak from a place of evidence mathematically where you can say, in this trend, I can see where this trend is expensive. And that is the missing part. In an auction that is going like this, okay, if I say, show me where it's cheap and show me where it's expensive, okay, if you do not have an auction on the chart, you're going to look at it and you're going to say, oh, we're in a choppy market. But what most people don't understand is there's a very big difference between chop that goes like this and an oscillating D-shaped auction where the banks really, really, really make a lot of money keeping the market in an oscillating range for the day, which is actually one of the most easiest ways to make a lot of money. When you're in a D-shaped auction and you understand you're in a D-shaped trading day, there is very, very, very easy money to be made, and most traders don't understand how. And so what I'm here to do is tell you that when I look at a B-shaped pattern, if I'm looking at an auction, I can see that this is expensive here and this is cheap. If I'm looking at a D-shaped distribution, I can see that this is cheap and this is expensive. If I'm looking at a P-shaped auction here, I can see that this is cheap and this is expensive. In every single market context, I'm able to tell you where we should be a very low risk buyer and where we should be a very low risk seller. Isn't that what trading is about? Yes or no? To know that when you press the buy button, you're buying in a cheap location with low risk. You're selling in an expensive location with low risk. This is the reason auction theory was created by banks, so that they can make decisions with large books of money based off what the other banks view as cheap and expensive. This is not volume, this is market profile. And we're going to spend all of our focus on this. There's a lot of trade setups that can be traded. There's arbitrage that can be traded. There's trend trades that can be traded. There's reversal trades that can be traded. There's a lot of things that can be done when you understand these three patterns. And we're going to see how the market traded today. We're going to see how the market traded yesterday, how to trade them, etc. Does that make sense? Tell me if you guys learned something from that. Yes or no? You guys with me? Fantastic. Great. Now, what we did was we built a software tool. Okay. We're going to get into this. It's called the Profile Pack. It looks at intraday auction segmentation. We're going to be able to track locations for buying and selling. So I'm going to share with you exactly where you should be buying and selling and why, how to trade those setups, where to place your entries, how to manage those trades. Okay. What's nice is it automatically does everything for you. And it's going to give you the ability to look at both market profile, which is time auctions. And we've also added volume in here so that you can look at volumes simultaneously. So that way you can look at arbitrage. Because if you don't have volume and market profile overlapping, it's hard for you to identify arbitrage. And arbitrage is one of the most powerful things you could ever learn as a trader between volume and time auctions. Okay. Now, here's a great example. Volume and time arbitrage. So here's a great example of very, 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 very good trade setups. Okay, so what you're looking at here, okay, this is an auction. Okay, there's an auction here. I have it as a line graph. We're going to show you how the software is going to show you different visuals. So I'm going to show you that this line here is actually market profile. And you're going to see that there's a volume profile here. So you can see that there's a difference. You can see that there's a difference. So I'll give you an example. Let's say I have two profiles like this. This is volume, and then I have this is time. Okay. So if I have a value area here and I have a value area here, technically that's the value area high, but that's also the value area high. One is for time, one is for volume. This is the value area low, and this is the value area low. So what we're saying is that there's a difference between the value areas, which is considered arbitrage. So the way we look at this is you see these black and blue lines right here. One is time and one is volume. Black is time, one is time, and one is volume. And sometimes they line up perfectly, which is a completely balanced auction, which is some of the best trading you can ever have. Okay. Sometimes they have slight arbitrage and we draw these little zones around them. Look at what happens when price gets to these arbitrage levels. This isn't by accident, guys. This isn't some hocus pocus like, oh, the market stopped here. No, why? I'm going to teach you something. Auction location. If you take a look, this was an auction here. The value area was here. Is this auction above or below the prior auction? Is this auction moving up or down? So we don't need to worry if we're in an uptrend or what the market's doing. What we can tell you is that the market was trading here. And then because the market had demand, the market moved up and now the market's trading here. What's unique about the auction theory is that when I was down here, this is considered expensive. This is considered cheap. When the market moves up, this is considered cheap and this is considered expensive. But let me give you some secret sauce. When the auctions are moving up, banks are wanting to buy the market cheap. They're not trying to sell it. They're not trying to make a market. The big guys are trying to buy the market, make profit. Okay. Funds, quants, anybody that's moving big money around. If they know that the market was trading here and this was cheap, and now the market's trading here, this is cheap, and then this is still cheap. So what happens is that when the market is viewed as cheap, if the markets are going up, I'm only interested in buying the market in cheap locations. What do you think the arbitrage value area lows are telling you? Cheap, cheap. What happened in those trade locations? Exceptionally powerful low risk trades. Does everybody understand the power of this? This is really, really, really powerful stuff. Okay. And I'm telling you that you don't even need to use the 30-minute time frames. You put this on a chart and then you just identify, you could be looking at a Renko chart, okay? And you're in a downtrend and you're sitting down in here and you don't even know it. And all of a sudden the market just goes whoop. And you're like, what the hell just happened? Well, you didn't realize that you're in where the banks are buying. Okay. And if you're ever in a trade and all of a sudden it went the other way, it's because you're on the wrong side of the auction. So I want you to write something down, okay? If I'm in a trade and it went against me, it's because I was on the wrong side of the auction. Just write that down, because that is going to basically help you understand that it's okay. You can learn how to get on the right side of the auction. Does that make sense, guys? Give me a yes if that makes sense. Every mistake that you've ever made can be fixed with the right teacher and the right information. Okay. I get a lot of people say, well, how does order flow interact with it? If you want to look at order flow, you're going to go down in time frames. I would be looking at order flow when we get to these locations. I would be looking at order flow in those locations. Order flow is not auction theory, guys. Auction theory is about telling you a compass saying where the banks are going to view the market as cheap versus expensive. Okay, so let me bring up my little trusty notepad because I made some notes here for you guys. And I want you to ask yourself a question, okay? How expensive is the cheese? You're saying, well, what the hell does that mean? Well, buying and selling cheese at a grocery store is no different than what I'm talking to you right now. You say, well, what do you mean? When you go into a grocery store and cheese is $5 a block, okay? And then you go into the grocery store next week and that same block of cheese is $6, $7, $8. What changed? The supply and demand of cheese. Price became more expensive, so cheese has to go up in price at the resale market. Same thing with trading. If the market's going up, it's because the auction viewed the market as cheap. Cheese became more expensive. So if you're going to see that the cheese is more expensive, don't you want to buy cheese for $3 a block when they send you a coupon? or do you want to spend $7 a block? You're going to go and clip the coupon. You're going to go into Walmart's little flyers and you're going to cut it out. You're going to say, I'm going to get cheese at $3, even though the store is pricing it at $5. Right now, what this means is cheese was $2 here. Now it's $5 here. And you're able to buy it for $3 here, and you're able to buy it for $2 here. Why would you pay $5? Doesn't make any sense. The problem is everybody's paying $7 for a block of cheese when they could be buying it for $3. And most traders don't understand how to look at the market like this. The reason I haven't been teaching this on Tickblaze is because we haven't had a chance to develop it. It took us a very, very, very long time to build this software for automated auction splitting and arbitrage. It's not some easy tool set that you can just start coding. I promise you this will be used in all of our trading rooms. This will be used in everything that you ever see us teach on. Auction theory drives every system. If I want to use RSI strategies, if I want to use momentum, if I want to use sweeps, if I want to use anything, okay, I am going to look at where it is relative to the auction. Why? Because it just adds so much more evidence that I'm making the right decision. Isn't that important? Let's talk about this. This is the secret to our software. This is a proprietary algorithm called auction splitting. This cannot be done with volume profile because you cannot split volume. There is not an equal increment that you can break volume down in. This is why TPO analysis was created. So what we do is we turn the auction in profiles, in auction theory. You're going to have full day trading. You can see bellies. You can see different bellies here in time. This is time. Okay, you can see time. Okay, you can see this. We call this multimodal distributions. What multimodal distributions do is it creates multiple auctions in the day. Well, what does that mean? Well, you could be in a oscillating range and then break down and then oscillating range and then break down, oscillating range. What you're basically saying is you're looking at an auction that broke, an auction that broke, and an auction that broke. So what we do is whenever the market profile shifts value areas, whenever new auctions are created because of value being shifted, market profile can split and it can identify new locations of cheap and expensive. The problem with looking at it from this view, or like what every other person looks at, volume profile, is that you never know what's cheap or expensive. You can't. I can look over here and I can tell you right now at current price what's cheap and expensive. I can tell you immediately where the banks are looking at it being cheap or expensive because the auctions are shifting. And I can see that eventually the market shifted here, then it shifted down, then it shifted here, here, here. And then they started buying again. They started buying again. They started buying again. They started buying auctions here. I can tell you right now that this is expensive right here and this is cheap. I know where I should be buying and selling based off where the banks are telling me value is. It's a moving target every day at any given moment. The auction is where you're doing business every day. And if you understand the auction, let our software split it for you because then you don't have to do this manually. You can't do it manually. It's impossible. There's no physical way that a human being can split auctions. It has to be done by an algorithm. Does this make sense to you? And you're going to see that when the market splits, you're going to have P-shaped distributions, you're going to have D-shaped distributions, and you're going to have P-shaped distributions. In every single pattern, we can tell ourselves what's expensive and what's cheap. That's the key. This is important. So I'll give you an example. If I zoom in here, I'm going to do that. Don't do that, Sean. So if I go in here and I zoom in for a second, I can see here that this is a P-shaped distribution. I can see that's a D-shaped distribution. That's a D-shaped distribution. I know how to trade the Ds and the Ps because I know where cheap is. I know where cheap is. I know where cheap is. When the auctions are moving up, I want to be a buyer. When the auctions are moving down, I want to be a seller. That's that simple. It doesn't need to be complicated. And the auctions are sideways inside of each other. I want to be a seller and a buyer. Yeah, great question, Dr. Vijay Shea. He's saying, I understand TPO, but what is the auction splitting? The auction splitting is actually where we take the increments within the market profile and we break it down into when value shifts, and we can split the time distribution internally. I know that sounds complicated. It is quite actually complicated, but it's part of our software and how it's been designed. 6 months of coding went into that. It's very, very sophisticated, to be truly honest with you. There's a lot going into that. Yeah. So here's a great example of multi-timeframe alignment. We can do this on monthly profile auctions. You can split monthly auctions. This is where the biggest of the biggest trades take place. So if you're a sniper and you like, for me, I like really, really, really big frickin' trades, right? Not as a day trader, but like you could do this on stocks, futures, Forex, crypto. You can apply this on any asset class, and you could look at, maybe you're an investor and you want to position the auction. Maybe you're looking at stocks and you want to put this on a stock. You can do this and you can identify the monthly auctions or weekly auctions. Maybe you're a swing trader. I can tell you right now that the auctions are going up, right? The auctions are inside of each other, right? They're splitting inside of each other. And what's interesting is that just by understanding this is cheap, this is cheap, this is cheap. So when the market comes down here, boom, into cheap territory and then shifts back up, I know how to be positioning myself as a very, very low risk, high probable trader. Same thing on the monthly, the big time frames. You can see this is cheap and this is cheap. Auctions are shifting up. So if I'm going to be a buyer, I want to be buying down in cheap locations. Depends on the way you want to look at the market. You can look at it on a day trading basis. You can look at it on a swing trading basis. You can look at it on an investing basis. Very, very, very important. And here's the cool thing is that we've built the software so that literally with a click of a button, you can toggle between daily, weekly, and monthly. Yeah, we're going to do this, Jennifer. Yeah, we're going to go into the charts, right? Remember I said we're going to go into theory and then we're going to go into examples. Absolutely. Yeah. And if you're new to this, totally understand. It's sometimes a lot of information. Okay. So we're going to go into this. So here's like an example of how it looks on a chart. Okay. And then we'll go into some real actual examples today. Okay. So when you look at an auction, okay, can everybody see this? The letters and the colors are the time, and these gray things behind it are the volume. Okay. You see how there's two red lines here? Those are the two value area highs. That is one for volume and one for time. Price gets up into that arbitrage location, very expensive territory. Price gets down into the cheap territory, prices. Now, these are 30-minute time frames. So when you look at the move for the market to go from here to here on a 30-minute chart of the S&P, that's a massive trend as a day trader. Okay. Same thing here. If you take a look, the auctions are shifting to the upside. I have a D-shaped distribution. I have a D-shaped distribution, but I can see that the auction is moving up. Value is shifting to the upside. When value is shifting to the upside, I can buy the market when it's cheap, or I can buy the market when we get back down to cheap locations. Cheap, cheap, cheap. Profitable trade, profitable trade, profitable trade. When you understand where the market is cheap and the buyers are showing you their hand, you should be buying the market in a buyer's market when the market is cheap. It's that simple. Does this make sense to you guys? For those of you that are trying to understand some of the concepts that I'm talking about, anybody that's new here or not understanding this, I will go into the charts and I will show it. Okay. Same thing now. Look at this. When the auction shifted down, when I say the word auction, I mean the value area. Why? That's where 70% of your trading is going to take place. So if the value area shifts down, this was the prior auction, and then all of a sudden the market shifts down and now this is your auction. Whenever I see auction, I'm saying I can see the difference between expensive and cheap. If you don't know the difference between expensive and cheap, you don't have an auction. You don't know anything about the market. You can't sit there and say that you know where you should be buying and selling unless you understand where the actual auction is. If you go to buy cars and you go into a car auction and you don't understand what you should be paying for cars, you're going to overpay for cars, right? Does this make sense to you? Like as a trader, whether you're looking at the S&P, crude oil, the Nasdaq, I can tell you right now based on this picture that the value area shifted here from here, which means this was a buyer's market. And then as soon as this shifted down, we went into a seller's market. As the value area shifts up, we can buy the market in cheap locations. We'll get a chance to buy this location. By the time this shifted down, the auction would shift. As soon as the auction shifts, then I can be a seller. The market came back up here, sold off, and then dropped. I can draw the picture here. Boom, 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 boom. Came in cheap, expensive, cheap, expensive, shifted down, cheap, expensive, cheap. Every time the market changes hand from cheap to expensive, it's doing so at expensive or cheap locations of the auction. Does this make sense to you guys? We're going to go over a lot more examples. Here's another example. Okay. You can see that the auction is here. Then the auction shifts down. The auction shifts down. We are in a trending down market. Makes sense? It is a seller's market. At the time of this shifting down from here to here, we would not know it shifts. It takes a couple bars to shift. So during that time, this auction would have been here. So the market shifts down. It comes into an area of cheap locations from prior auction. We get a really, really good trade. By the time you're taking profits here, the next auction will shift. The next auction will shift down, and it will tell you where this is expensive. This is expensive. This is expensive. This is cheap. This is cheap. Does this make sense to you guys? The whole point of this is identifying where you should be buying and selling the market from a professional's perspective. Okay, take a look here. The auction shifts up. You can see that the auction is shifted from here, push, to here. That is what we consider a buyer's auction. What happens? The auction shifts up. We basically get down to where? Cheap territories, you take your targets in expensive territories. That's simple, guys. You buy when the market tells you it's cheap. You sell when the market is expensive, and you only do so relative to the location of the auction. Okay, now, when I go back to my notes, the first thing I always say is the big question is, how expensive is the cheese? If you get up in the morning and you don't understand how to pay for cheese, you shouldn't be trading. I know that's a really hard thing to hear sometimes because, you know, who's this guy on the mic? He shouldn't tell me I shouldn't be trading. And guys, if you're going to be a trader and you don't have somebody that is very experienced sharing wisdom with you, then that's ego. My ask is that you let the ego down. I've been doing this for 15 years. The number one thing I can tell you right now is that 95% of traders fail. Okay. And what happens is, if you're not able to look at the market from a professional's perspective, then a lot of things that you're doing is gambling. And so my goal here today is to always help you understand whether you understand cheap versus expensive auctions. Then you can answer the question, do I really have a proper read on the market? If you don't have a proper read on the market, be very aware that you are trading as a very dangerous trader. That is not I'm not trying to call you out. I'm trying to help you become the best trader possible. Okay, you can take the blue pill or you can take the red pill. The blue pill says stay in ignorance and there is no matrix. The red pill is I'm ripping off the Band-Aid and I'm going to teach you how to be an exceptionally good trader if you learn what I'm teaching you. Okay, now once you understand this, which is everything I've been explaining right now, you have a compass for the day. You'll always know where the market's cheap, where the market's expensive, and then what you can do is that you can go into understanding the location of the auctions. You can understand, do I want to be a buyer or do I want to be a seller? And then you can focus on all the trade strategies. These are all strategies, okay? I'm going to show you all of the strategies. So this isn't some, give me one trade setup. There's probably 10 trading systems in the auction. I'm going to teach you every single trading system that the auction will provide you. Therefore, you're getting 10 in 1 pretty much. You're going to get arbitrage. You're going to get TPO trend trades, low volume trades, low time trades, high volume trades, high time trades, single print auctions, shifting VWAPs. We're going to give it to you, all of it. It's all part of this software. But every single one of these trades should only be traded if you understand where cheap and expensive is. If you're buying sweeps, how many of you guys remember us teaching sweeps? I bet you every single time you look at a sweep that happens in a cheap location, it makes a shit ton of money. Every single time you buy VWAP in a cheap location, it works. Every time you buy demand in a cheap location, it works. Every time you sell VWAP in an expensive location, it works. You don't realize that the reason the trades that you're trading that work are working is because you're on the right side of the market. And then you're like, well, why did I get stopped out? Wrong side of the market. Okay. Now let's go into this. This software is like the Ferrari of trading tool sets. You can visualize it in 1,000 different ways. I'm going to show you how to set it up. We're going to go through this. We're going to talk a little bit about this. Okay. We're going to talk a little bit about how to view profiles. You can move the profiles on the left side of the chart. You can move the profiles on the right side of the chart. You can look at them as line graphs. You can look at them as histograms. You can look at them as colorful little box and rainbows. Sky's the limit. We're going to talk about how to set it all up. There's a reason, right? There's a lot of stuff going on here. Okay, we're going to get into this. You can look at it in terms of multi-time frames. So you can look at it as weekly, monthly, etc. And you can put the bars in front. You can put the bars behind. We're going to get into this. We haven't even talked about how to trade shifting VWAPs yet, which I know everybody loves VWAP. Can you imagine if you had VWAPs for every new auction? That's not anchored VWAP. It's VWAPs relative to current balance. Can you imagine that if everybody was just trading the daily VWAP and you only had one VWAP? That makes no freaking sense to me. Why? Because during that day, maybe there was a balance area here, and then there was an auction here, and then there was an auction here. VWAP was here, and then there was a new VWAP in here, and then there was a new VWAP in here. Can you imagine trading VWAPs in every new auction because that's where the proper VWAP is supposed to be? You would have seen that today on crude oil. Crude oil is a perfect example of that. I was just crushing it on the VWAP trades. We're going to talk about that. Okay. So poof, that's a lot of information. Okay. So before I move into the strategy setups, are you guys happy with the information I've shared with you today? Okay. Give me a yes that you've learned something today, a little bit of an aha moment. Yes. There's a lot. We're going to spend a lot of time on this, guys. We're going to do AMAs tomorrow morning on this. We're going to be going through this. We're going to be teaching this. There's a lot of stuff here. Okay. This is very, 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 very eye-opening stuff. And so much that, Jeff and I'll probably run some training on the trading rooms, et cetera, et cetera. What I'd like to do now is I'd like to unpack a few of the trade setups. Okay. So this is one of the trading setups. Okay. And one of the best trading setups you'll ever learn. This is what we call profile arbitrage. So profile arbitrage is a secret weapon. If you have arbitrage located on your chart, I promise you're in the 1% of traders that understand what the hell that is. Okay. And you have an unfair advantage. Arbitrage trade setups happen on a daily basis. Arbitrage can be done on monthly, weekly, and daily levels. So depending on if you're an investor, a swing trader, or a day trader. Arbitrage is when we identify buy zones and sell zones between volume and time. Okay. And so what ends up happening is, as you can see here, when the auctions shift to the upside, you can see there, when the market moves up like this, different value, right? There's a D shape and a D shape. What this means is that there was arbitrage here. It happened here. You can see there was a difference between volume and time. That was an amazing trade. And then there was arbitrage here. Came right down, and we're just talking the best of the best trades, guys. So normally what you want to do is you want to be trading arbitrage in shifting locations. This is one of the most powerful trades that I've ever learned in 10 years of trading. Why? Because you're basically taking volume profile and market profile, and you're looking for discrepancies between the auctions. So you've got time and then you've got volume. And what you're doing is you're creating an arbitrage between the two auctions. This is some really sophisticated shit, guys. Like I'm telling you right now that this is not, you're not going to find this on regular volume profile software. It doesn't exist because you can't have this without market profile. And what's even more powerful is that it works 10 times better when you can split the auctions, because if you don't split the auctions, you can't identify all the different arbitrage. If they were all just one auction like this, you've got one big arbitrage for the day, and that's not really, really ideal. You want arbitrage splitting so that you can identify that you want to be a buyer in the best trade locations. Okay. Now, here's an example of it. Okay. Now, this to me is a very, like, here's a D-shaped distribution. Yeah. The auction shifted here, came down to arbitrage, really big trade. Remember, these are 30-minute charts, right? That's a big move. Okay. Then it come down to the next thing here. You can see that this is actually counter trend. Buying this arbitrage location after the shifting of the auction down is higher risk because now that's counter trend. But this one isn't counter trend. This one, after the market shifted down, you're selling in arbitrage for massive drops. So anytime you're buying against downshifting auctions, this is counter trend. Yes, you're cheap, but it's counter trend. Okay. Anytime you're buying with shifting auctions to the upside, you're with trend. Does that make sense? So you can trade this counter trend or you can trade this with trend, but these are giant trades. Yes, these are giant trades because who do you think's trading these? This is not a retail software package. This is not retail trading indicators. This is what the banks are looking at every single day because banks use market profile. Why? Because it was built by banks for banks. That's just the truth. You can Google Steidermeyer. You can Google market profile. I'm not here to try to convince you this. I'm here to tell you that we've automated arbitrage, which is not something that's done easily. Okay. You need to understand which side of the market you're on and why. Okay. Now, this is what we call shifting VWAP. Shifting VWAP is new VWAPs relative to the new auction. So instead of trading just a regular VWAP, we trade VWAPs with the shifting auction. Why? Because volume is shifting. Everybody always wants to know, where should I put the anchored VWAP? Well, it shouldn't be placed randomly off of information that you are coming up with between our two ears. Me too. Like, I'm not just going to sit there and, well, I think I should draw an anchored VWAP from this low. Why? Well, because that looks like the right place. Well, what did I just do? I just said, I think I know what the market's doing. When you have auctions on your chart, you're basically removing the I component and you're saying, I don't think this. The auction is here. The auction was there. We base the actual VWAP relative to the new auction shifting so that volume weighted average price is in relation to the new auction. Wouldn't that make sense? Like, VWAP only works relative to the auction that it is being traded in. A lot of people think that the daily VWAP is a constant factor. The daily VWAP is only a constant factor in D-shaped patterns because there's no shifting value. That's the problem. Most traders don't understand that they're using the technical indicators incorrectly. And I'm here to just tell it to you straight. Make sense, traders? We're not putting the VWAP at the start of the auction. No, it actually has to wait until 3 candles form the distribution. So there has to be a placement on value area, and there has to be a placement on the 3rd candle displacement. So there's a lot of stuff that goes into when we place that VWAP. It has a lot to do with when the actual auctions are shifting. They automatically plot for you. Yes, it automatically plots this for you, Rody. You do not need to draw anything. That's the whole part of the software. Yeah, absolutely. Okay. Here's a great example of it shifting again. You can see the auction shifted and the VWAP will move relative to the auction. Okay. These are just some great examples of current shifting auctions. Okay. This is something that, this is something that when it happens, you just want to go in and you want to go in with all the chips. Okay. So single prints is a very, very secret trade. This trade doesn't happen all the time, but when it happens, you want to be paying very close attention. So we identify single prints. Single prints is when you have an auction that identifies very, very low time in the market. And when we come back up to test those single prints after shifting auctions, so you can see the auction here, and then the auction shifted down. any one of these single prints is very, very low risk trade locations. So the market comes up to a single print and drops. This isn't me drawing some line, oh, I called this fair value gap. No, this is a single print auction in a downshifting market. So when the market comes up to test it, basically what that means is there's a lot of opportunity in these locations. Okay. I know that's a lot to unpack, traders. Lots of information. Yes. Everybody with me still? Anybody want to go and look at some charts really quickly here? Let's do it. Fantastic. So what you're looking at here. So take a look at this. So take a look at the euro for a second. We're going to talk about this today because this is just really, really great examples here. So one of the things we're going to do is we're going to just start at the beginning. Daily auctions. Okay. I'm going to increase this to a month of time frames. We're going to download a month of data. Okay. And take a look at this. Okay. So I'm going to zoom out here. We're going to zoom out. We're just going to just unpack this for a second. Okay. 1 second here. We're going to just unpack it. I'm going to turn off all the zones. Okay. And we're going to start at distributions. So if I want to look at it from a big, big picture, there's the monthly auction on market profile. Okay. This is a market profile. And this is basically TPO analysis. TPO analysis. Okay. And, what's interesting is that you say, well, why did the monthly VWAP fail? Well, because that's not how you properly trade VWAP. Like a lot of people don't realize that just because the VWAP's going down and you want to sell it and it just goes all the way through it, and you're like, what the F? I'm here to tell you that that's not actually where the VWAP was when we split these auctions. When you split these auctions and you go down to auto split, you auto split the month. Give it a second here. Come on. Gotta split this. I might have to reload, guys. Caching a lot of data. Got a ton of information. Bear with me. It happens sometimes. If it crashes, I'll reload it. I got a whack load of charts loaded here right now, so we'll just reload it. Bear with me, traders. It's going to reset the chart. So type in anybody learning something from this, guys. We're going to go into the charts and yeah. Yeah. Well, it's because I'm really taxing it out. I've got a whack load of stuff on the charts, right? I got a whack load of stuff on the charts. Like a lot of stuff. I got like way too much days loaded. I probably got 20 markets and 10 markets with like months and months and months of data. So we're going to reload it. Yeah. Data overload. Good stuff. You guys taking a lot out of this? Maybe it was Trump talking. I don't know if Trump is talking. I heard somebody say Trump was talking today. How many of you guys would like to learn with some of us and do some really deep dive training on this and really do some deep dive education on this? If we're going to be doing a webinar tomorrow morning, a big, big webinar. We're going to be doing it during live markets. Okay. We're going to be doing it during live markets. And yeah, what's going to happen? That is the question. All right, all right. It's just loading up here. Yeah, we're going to be doing well, the whole point of the AMAs is to just go into the strategies, right? Go into the actual strategies. Give me a second here. It's going to load a new chart. Yeah, we're going to do a live demo right now, guys. Just loading the charts, guys. Appreciate the patience. So let's go into it here, guys. Can you guys see the screen? All right, back on track. Okay. So remember we said when we loaded the month, and if we loaded the monthly VWAP on here, okay, we load the monthly VWAP. When we had the big auction on the month, okay, basically what that means is the VWAP was going like this, right? And then it went like this, and you're like, well, why did the VWAP cross through and then cross back through like this, right? The reason is that the monthly auction splits. So when you look at the actual daily distribution shifting, when you look at it from a bigger auction, you don't realize that you're actually dealing with different auctions. Like there's the weekly auction, okay? And when you look at last week's distribution, this is last week's trading on the euro. We'll go into the S&P, we'll go into the crude oil, we'll go into other markets. I'm just going to show you an example. You can see that there is different bellies of time. There's 1, 2, 3, 4 auctions in here. And so if I split that and I go in and I split the time, auto split, you can see that value throughout last week, there was a value area, then there was a value area, then there's a value area, then there was a value area, then there's a new value area, and there's a new value area. You can see that all throughout last week, there was different auctions. And the reason why that's important is as the market traded down, we want to be looking at expensive. As the market traded higher, we want to look at cheap. All last week, if you were trading the euro dollar, from this time on, you should have been a buyer. Cheap auctions. Do you understand that? Like that's the power of understanding what we're doing here. Now you look at, if this is the weekly distributions, if I want to go to daily, I shift it to the daily auctions, okay? Technically, if you take a look, what's really unique here is that if I look at the daily distributions, today, I am literally inside yesterday's auction. That is what we consider pure balance, which means we can identify cheap and expensive decisions very, very easily. When the current auction is inside the prior auction, that is a very easy trading day. You want to know why? That means you know where you can say very quickly, I know where the market is cheap and expensive. Now, if I want to split these auctions, auto split, take a look. Since yesterday, from yesterday afternoon, yesterday's close to today, slightly shifting lower. Yes, slightly shifting lower. If you look here, this shifted here and then shifted down. Here was the auction, shifting slightly down, shifting down. So watch what happens. When I come in and I turn on the arbitrage, right? I look at this, okay? And I look at this area, okay? You can see if I just merge them, I can merge them back, you can shift it. We come right into yesterday's auction on the arbitrage. You don't need to split the distributions when your entire day is inside of yesterday's auction. Just makes sense? Okay, at what point do these profiles come in here? I'm not sure I understand that question. The entire conversation's on the profile. Okay, so let's go in here and let's just take away these. I'm just going to show you a few things. Okay, we're going to get out of this. Let's take a look at crude oil for a second. Okay, this is critical. Okay, if you look at today, just take a look at today. This is today on crude oil. Okay. Right now, you can see that we have what we call two bellies. That's what we call multimodal distribution, MMD. And when you have multimodal, that means that you have different balance areas. There's a shifting auction here. You just don't know that. So remember what I said to you? I said, when I'm in an uptrend, how do I know what's cheap or expensive? Well, you can't in a view like this. But when I split these, I can tell you right now, automating the splits, as this auction shifted here, this is where you should be buying crude. As soon as the auction shifted here, this is where you should have been buying crude. It's that simple. This is the TPO trend trade. This is what we call the TPO auction trend trade. Why? You need to split the auction. Once the auction splits in a trending market, your trend trades are in cheap locations. Why? Value areas are going up. You buy cheap locations. This is very, 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 very important. Now, a lot of traders don't want to see all the colors. You don't need to have all the colors on your chart, guys. What's unique about this is that you can go to the market profile view. You can literally put it on the right. You can put it on the left. You can put it as blocks. You can put it as blocks and letters. You can put it as letters. You put it as an outline. A lot of people like the outline so that you can just see it. You don't have to even have it on your chart. You can just have the auction. You can just have the value areas. I like just having the value areas because at the end of the day, unless you're trading high time and low time auction nodes, and you're just looking, the easiest way to make sense is this shows you where you're cheap and expensive. I can just go right now and tell you where I'm cheap and expensive every day. I don't need volume profile. I just need the auctions to be splitting. If I go into the volume profile and I turn this off, I go to hidden. Now all I'm doing is this is the cleanest way to use the software so that if you're looking at any other software and you're adding this to your chart, you now have the entire. What's powerful is that this isn't just lines. This is the automated split. So you're merging the auctions. So what you're doing is you're saying where the institutions have split value. And then once that value is split, you're then able to identify how to trade cheap and expensive areas. Well, that's the difference between volume and time, Brian. Time actually has to wait for candles to trade before volume will even transact. So it actually, value areas won't shift until you've actually had a new auction change. And that's going to take a few bars. So price actually has to prove the auction before you'll actually get a shift in the auction. Yeah. Yes, you always want to use 30-minute charts. Why? Because there's 46 increments in a day. This is just auction theory. There's A to Z. There's so many 30-minute fractals in a day, and that divides into the A alphabet and even number, and this is why auction theory is always done on 30-minute charts. Volume profile is not auction profile. Like volume profile is not market profile. Yeah, let's take a look at the Nasdaq. Let's take a look at the read on the Nasdaq right now. Okay, so this is before the splits. So this is the secret sauce. This is we're looking at multimodal auctions. Okay, if I want to look at it on the week, I can go on the week. So there's the week. Yeah, so I can just tell you right now that last week was a completely balanced auction from market profile. Remember, this is not volume. This is not volume. So don't confuse the two. Volume is not market profile. We are focusing on market profile. So we can see here that the value areas were completely balanced last week. And every time the market got below that area was where the market stayed. Completely balanced auctions. Yes? That is something that is unique. Now, guess what? We shifted the value areas from last week to this week. So we are technically in a buyer's market on the week. That doesn't mean on the day, guys. That means on the week. If I want to go to the day, I shift it to the day, and we can shift it from day by day. Okay. Technically, we are inside yesterday's auction, but yesterday was a trend. So let me explain this. If I have trending days, I need to be splitting my auctions. This is very important. Okay. And when we can see, like, I can't split this auction. Today is not a different split. We have not shifted value areas. So today's trading locations, if my auction is here, shifting up from there, I want to be buying inside of the arbitrage. And where did they stop the market today? They stopped it in the arbitrage between volume and time. Does this make sense? That is why the market stopped here off the open. That is not some accident. Okay. Now let's take a look at this. Yesterday, remember, I'm split. This is already split. So whenever you come in, the first thing you want to do is you want to split your auctions. That's the first thing we always do. You come in, you load the software, you say, okay, maybe you don't want to see all the nice colors and all that. You can change the visuals here. You can just change this. That's fine. But the most important part is you want to split the auctions. Yes. As soon as you split the auctions, let's take a look at yesterday before the market open. Yesterday before the market open, or even at the market open, okay, you can see, let me just turn this off. I'm going to turn this into a displacement of a line chart so you can see it. Letters, outline, right? And if you just want to hide it, let's just go to hidden, right? Let's go to the volume, just hide it. I'll make it super easy for you guys to see. All I care about, if I can see that this is yesterday's value areas for time. Remember, we're looking at the black. We're not looking at the blue. The blue is the volume. The time is the critical. Always put your emphasis on the black value areas first. Volume is only used to identify arbitrage. So let me explain something. Where did they come in the overnight session? They came right into yesterday's what? Arbitrage. Why? Because the auctions were inside of everybody. They were inside of the prior day's auction. So that is why the banks sold that auction and drove it down. Value areas from time was inside yesterday's value area. So that meant they were in the overnight session, they were keeping value here. They were doing business. Does this make sense? Now, when we look at today's auction, okay, we look at today's, they shifted below, okay. Look what happened. Look what happened here. Last night, auction was inside of yesterday's auction. Right there. They brought it right to the arbitrage. Literally to the tick, guys. This isn't some joke. This isn't some... Right there. Right to the arbitrage. You can bring it down one tick here. Always front run it by a tick. They bring it into yesterday's arbitrage. And what happened? That is where the trade was in the Globex session. Sometimes you're going to get the arbitrage trade in the Globex session. Sometimes you're going to get in the cash session. Arbitrage is going to happen when it's arbitrage. This is all about understanding what the banks are doing. Okay. Now, here's the thing. After that trade was done, guess what happened? Everybody's got to get out of that trade. Shifting auctions to the upside. Value area is moving up. Buying cheap. Below the value area low, cheap, expensive. What? This isn't some game. This is what the banks are doing. And until this auction shifts here, until we get a new value area shift, I'm not interested in trading Nasdaq. There is no low risk auction trade on the Nasdaq right now. Why? Because we've split the auction. There's no split today. There's no better trades to be had on the Nasdaq right now until this shifts. So arbitrage is here. You can go into the arbitrage. Fresh, tested, broken, disqualified, overlapping, support, boom, boom. You can do that. You can just see that. Like if you take a look at yesterday's auction, like we came right down into that level. Before this yesterday, okay, so let me just explain this. Yesterday, we came into prior day's auction, but look when they drove it down. Before this value area went from here to here, it takes time for the auction to shift. So take a look at this. This is the arbitrage level. This is an arb level. All the way across. What'd they do? They came right down to it. And it came all the way back up here. That's a massive move on the Nasdaq, guys. Like I don't know if you guys understand that. That's a really, really big move as a day trader on the Nasdaq. That's a 30-minute chart. Comes all the way down into the arbitrage, comes all the way back up here to test the value area from the prior day. So this is important for you guys to understand that there's many, many different ways to trade the auction. Okay. We'll look at this. We'll get into that, right? There's many different ways to trade the auction. Guys, I'm going to turn off all these ARB zones. We're going to go crazy. Just like, this is good for back testing, good for looking at the prior auction. Okay, let's take a look at gold right now. So let's take a look at gold. Okay, so let's just take a look at this for a second. First thing you do when you come into gold, come in, you split the market profile, auto split it. So when you auto split the auction, okay, take a look at this. Yesterday, after gold shit the bed on the massive fundamental day, like that was that massive day that gold tanked, okay? This was the last auction on the day. Yes? And then the next day, this opened up here. This auction traded all the way across. Take a look at that. So if I want to go in and actually just back test the levels for, just go to arbitrage, go to resistance, go to broken, test it. Take a look at it. I mean, it touches it to the tick. Like it just comes up and touches it to the tick. Came up and then dropped from that location. Does that make sense, you guys? Like if you take a look at that, and then what happens? It comes back up and tests it again, trades right back out of it. Now, here's the thing. We're sitting inside of yesterday's auction. We're sitting inside of the actual yesterday's auction. I would not be looking to sell. I would not be looking to sell. Why would I not be looking to sell right now? Can you guys, anybody answer that question? Where are we relative to yesterday's auction? Where are we? Where is, let me just highlight this so you guys can see this. Let's go to market profile, display it. Let's turn it to a letter, outline. Okay. Let's go to the volume profile. Let's do it to an outline. Okay. Let's just hide them so you guys can actually just see the black. I just want you guys to see the black for a second. Yeah. Like that's all you need to look at just to get this really, really, really. Where is the black relative to yesterday's black? Is it slightly shifting up? Slightly moving up. Yes. It's slightly going this way. Yes. Slightly. Yes. Even though we're in a range market right now, buyers are controlling that market. So what you do is you identify locations to buy today. There's only a few of them. Very, very easy to do this. Let's go to market profile, vary high and low, volume high and low. Okay. And VWAP. The VWAP in the auction, cheap. Really, 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 really important trades today because we're in a D-shaped distribution and we're in a buyer's market. You want to be buying cheap in the arbitrage levels or on VWAP at cheap locations. That's how you know VWAP was a really, really good trading location today because it made sense to take that trade based off of what the auction is telling you. Do not get it twisted, guys. Do not get it twisted. I'll give you an example. If you want to trade demand levels, you can trade demand zones. If you're a supplier demand zone trader, got a rally-based drop right here. It came into a demand zone, but where did it come into the demand zone? It came into the demand zone in an upshifting auction at the value area arbitrage low. It's only that demand worked there because it was in a cheap location on the auction. Don't get it twisted. Auction theory trumps everything. Everything. That's how the market works. Take a look at the S&P. Okay. Let's go into it. What do we do? What's the first thing we do? You guys tell me. We split the auction. Okay, we come in here, you split the auction. Why? Because I just want to see if the value areas are shifting. I want to see if there's a reason for it. What we can do is, I know everybody thinks the colors are nice and colorful. It's really, really good for makes the software looks really colorful. But what we're going to do is we're going to go down and we're just going to make it easy for you. We're going to just hide it. We're going to go here. We're going to hide it on the volume just for the sake of making it really easy to see the black levels, right? And then what we're going to do is we're going to go and we're going to split it. Oh my God. Perfect. So here's the thing. We can already see from the open of the Globex, 1, 2, 3, right there, that the black is higher than the prior black. Yes. Whenever the black is higher than the prior black, what does that tell us? Buyer's auction. When the black is lower than the prior black, we're in a seller's auction. If you've ever questioned your bias theory and you said, I don't really know if I should be buying or selling right now, that's a pretty honest statement. Right now, our software will tell you automatically that buyers are in control of this auction. So when we turn on the value area highs and lows for the auction, okay, what I'm able to do before we get there is I'm able to identify two things based on these two auctions. I can come in, it is cheap down here, and it is cheap down here. Does that make sense to everybody? If I'm going to place buy trades, I want to be buying when the market is cheap, and I want to be selling when the market is expensive. That is how you know that you understand the price of cheese. Market comes in and holy shit. This isn't Sean's hocus pocus. Auction shifting up, buy the value area low areas on arbitrage. Always put an emphasis on time. Time is always going to be better than volume. When the value areas are completely balanced like this and there is only one, look at, they're overlapping, then that is the level. Very, very strong level. Boom, boom, boom. I don't know if we got down there today. It did, and it just came back and tested the prior level. Now you can see this, guys. This is serious. We've got a VWAP trade in a buyer's market. Let me explain something, okay? All the VWAP traders that were looking at this, I'm here to tell you what happened. I don't need to know this. I know that every single trader that trades VWAP that doesn't understand what I'm teaching today took a VWAP trade right there and got smoked to the short side. You want to know why? Because they don't understand what the hell they're doing. They're just trading VWAP. Oh, we're below VWAP. We're going to short the VWAP. Oh, we're going in. No, we're not. We're in a buyer's auction. And this is exactly why you should not be shorting that VWAP. You wait to get above it and you trade that VWAP long. That is how you understand you're on the right side of the freaking market. And that is why all the VWAP traders here made a shitload of money today. Because you're in a buyer's market, an upshifting value auction, and you're coming out of the value low. It's all about context, guys. I am here to tell you that every strategy that you are trading right now, I can improve it drastically by just looking at the auction theory and apply what I'm teaching right now. Now, when you split the auctions, it's very important to understand something, that guess what? We have a new split happening. Guess what? Auction is shifting. The value area is shifting right now. Very, very small value. I will wait for that to become a larger value area so that I can basically see the value of this auction. This is too small of an auction for me to trade. There's no movement for profit. I need to see a bigger auction, right? I need to see I need to see movement. Like if the value area shifted like this, that's when I would trade it. I need to see distance between the value area high and the value area low for me to want to buy the VWAP or buy the value area lows in an upshifting auction. Does that make sense? Lots to unpack here, traders. There's a bunch of trade setups that I'm going to teach you, and we're going to talk about this a lot tomorrow. The first one is arbitrage. We spend a lot of time on it because arbitrage is the king of kings. When you understand arbitrage, you understand a lot about auction theory. TPO trend trades is basically taking arbitrage in split auctions. So this is what we call arbitrage. So I'll give you an example. This is just trading arbitrage in a trending market. So arbitrage is trading the difference between value area lows. There's an arbitrage between the value area lows there. But a TPO trend trade means that we're shifting auctions. So TPO stands for time price opportunity, which is market profile. It's the TPO is all those letters, all the time and price, okay? But when the value areas are shifting, okay? When the value areas are shifting, this is what we call a trend trade. Okay, when the value areas are not shifting, it's called a range trade. You just trade the lows and the highs. Okay. Makes sense? This is an automated splitting system. You will trade the manuals from a manual perspective, but this is this automates the splits. This is the biggest part of the software. Now you can put the bars in front of the software. You can put them in front or behind if you want to see the things, right? You can do that. But lots to take in here, lots to unpack, guys. Take a look at the Russell. Yeah, the Russell did pretty much what the other markets did. Let's take a look at the YM today. Yeah, take a look. I'm going to split the YM. Yeah, there was no, take a look at this. This is a really, really good trade coming. Really good trade on the YM. Explain why. Because we got a really large split. So let's go in and turn off the rainbow. Let's turn it to hidden. Okay. And you can just go here to the volume and you can put it to hidden if you want. Okay. And all I can tell you right now is that we are in an auction that is splitting to the upside. There's a VWAP trade here and there's a value area low trade. I'm more of a value area low guy because I really like to buy cheap. So what I will do is I will come in and I'll turn on the value areas, value area lows, and I will turn on the value area lows. Why? Because I'm only looking to buy. And there's my trade. I will literally be a buyer right here. That is the best trade right now that I see across the indices. There is a really good trade happening on the YM if we get there going into the close, but like don't trade going into the close, right? Does that make sense, guys? Do you understand that that auction just shifted and there's a really, really, really good trade opportunity right down here because the market is cheap? This is real time. This is how to forecast what's happening in real time. The auctions can happen in real time. I don't control the auction, the banks do. Make sense? In a downshifting market, I would be looking for sells. So let me go back here. So if I was looking over here, okay, what happened? Auction was here. We shifted down. I'd be looking for sells. So let's go back and shift those over. Let's go here, very low, very high. Let's go back here to volume, very low, very high. And there was the shorts, right? There was the shorts this morning. So there was a short coming in here in the overnight, and there was a short coming in here today. Drop it down. Really good short on the YM. Okay. Lots to unpack. Now we're going to talk a lot about the strategies here. We're going to talk a lot about how to trade current auctions versus prior auctions. It's impossible for me to teach you everything that I've learned in 15 years of auction theory in one webinar, but my job was to unpack the simplistic aspect of it and literally debunk a lot of the things that most traders don't even realize are there. Okay. So did you guys learn something from this? I hope that you guys learned something from this. There's a lot of money to be made on auction theory, a lot of money to be made. There's a lot of change traders. Once a trader learns what I've taught them with auction theory, I promise you, they just become great traders. Like I remember when, the educators that work for our companies, I taught them auction theory. It just changed them. They become profitable traders because of just understanding the compass of the market. It's not about me. It's about giving them the keys to the right information. Okay. So we are going to give away a free license. Jim, Pete, Jeff, who's got the actual tools for that? See here. Jim,
I
Jeff,
just
Pete.
pasted the link.
Cool. So if you guys could do me a favor, there's a link in the chat box. If you could fill it out, please. What we're going to do is we're going to give away the software to so hopefully one lucky cheese eater. Right? No, all jokes aside, guys, I hope you have lady luck on your side today. So we're going to do that. If you guys could do me a favor and just fill that in. That'd be great. Give me the cheese. The link won't open, Brian. No cheese for Brian. It should open. Just click it. Cheese, please. All right. Perfect. So we'll announce the winner here after, but what I'd like to do is I'd like to let everybody know that this software is probably one of the most sophisticated pieces of tools that we've ever developed in the inception of all of our companies. We built this software on NinjaTrader. We just didn't build it as comprehensive as this. The NinjaTrader version is nowhere near as comprehensive as our Tickblaze versions, just due to the sheer market profile efforts. We've put a lot more into the market profile for Tickblaze just because we own Tickblaze and we have a lot more that we can do with it. The visuals, the graphics, just everything that we can do from an auction splitting perspective. We did a much better job on the Tickblaze versions of this than we've ever done before, and we spent a lot more time on improving the auction, splitting algorithms, etc. Okay, so if you do own the NinjaTrader market profile software, the macro profiles, we do give an extra discount for you guys. So if you do own the market macro profiles on the ARC side of things, anybody here own macro profiles in the ARC side of things? Anybody here own macro profiles from ARC? Anybody here that purchased it? That is like kind of like a dumbed down version of this. We will be giving you an additional discount, so don't worry. If you guys do decide to use the software, we will give you a discount. You get extra credits for that, so just letting you guys all know that. Okay. And for anybody here that's new and doesn't know what I'm talking about, don't worry, because we have a huge launch price for you guys. And it's anybody that's new to Tickblaze and coming in here, you guys can take advantage of that. Okay. So I'm going to go over pricing, guys, and we're going to talk about it, and we're going to get into it. So this software is completely full turnkey. The automation, the splitting, everything that we've done is done. All of the strategy packs that we're going to teach tomorrow will be taught inside of the AMA. So I'll give you an example here. It comes with the indicators for all of the market profile, the splitting, the auctions, the arbitrage, everything that we've done. It also has the volume profile components. We didn't spend any time on volume today because it's really not the purpose of the software. It's just there for arbitrage and added value. We have a lot of documentation on this. So unlike some of the other tool sets, there's a lot of documentation that we've done for this software, just sheerly due to the sheer magnitude of the trading capabilities of what it does. There's setups, there's trading examples, there's everything. This is a one-time license. We will be giving you the desktops from the AMA. So if you come to the AMA tomorrow, we'll give you our pre-built desktops. And we are going to give you all of the strategies for this. So like literally, there is literally like 5 to 10 different trading systems that we will be teaching you tomorrow. I can't unpack it today because it's like just too much to talk about in one event. But what I will do is I will tell you that tomorrow, the entire shifting focus for tomorrow is identifying how to trade. We're going to look at current auctions. We're going to talk about live trade examples. We're going to map out the trading strategies one by one. We're going to look at arbitrage. We're going to look at profile splitting. We're going to look at trend trades. We're going to look at single prints. We're going to look at VWAP trend trades. We're going to just look at everything that comes with this software. My only request is that if you're using it, you use it with everything else that you're doing. This isn't meant to replace what you're doing. This is meant to either be a complete new trading approach to you or to enhance everything else that you're currently doing. I just totally believe that it'll change everybody that uses it. I just know that it'll make you think twice before you ever take a trade. It'll give you the exact locations to why you're trading and where you're trading. And you're never going to be on the wrong side of the auction, period. You can't. You can't be on the wrong side of the market when you have this software. That is the whole purpose. Okay. Plus tell you where to be buying and selling. It will tell you exactly where you should be buying and selling based on the trade locations. And that's what we're going to do tomorrow is we're going to show you exactly how to buy and sell using the software. Okay. So do we have a winner, Jim?
I'm actually looking right now.
Okay.
Let me see who we got here.
So tomorrow we have a big AMA. So I'm going to be up bright and early. It's 3 hours difference for me. So I'll be up at 6 a.m. with a coffee and we're going to be looking at the market. 9 a.m. Eastern, we're going to open up this AMA. We're going to go over all of the strategies. Tomorrow is all about the strategies, okay? And all of the strategies that we're teaching is going to be used from a market profile perspective, not volume profile. Everything is going to be done based off volume, market profile, okay? And so that's going to be tomorrow. Tickblaze is free. So if you're not using Tickblaze, you can download it. It's free. You don't have to purchase the platform. It's free for retail traders. It's part of the marketplace. This is a marketplace product, so you can purchase it. It's in the App Store, but ultimately the platform is free. So if you're not using Tickblaze, you can use it for free. If you're using Tickblaze, if you're not using it and you're coming from a prop firm or something like that, now's the time to use it. If you are using it, then there's nothing you need to do. Just you can purchase the add-on and you can use the software. Okay. So Jim, you want to announce the winner?
Can't see the names. There's some kind of tech issue. So just give me a minute and see if we can get it going here.
Sure. I want to thank everybody for joining us today. I want to thank everybody for learning. Hopefully you guys are learning and you guys are, find what we taught valuable today. Hopefully you guys take this and you can, like if you're using algos, if you're trading Renko charts, if you're trading sweeps, if you're using Striker, I mean, can you imagine trading Striker levels in an upshifting auction at the value area lows of arbitrage? Holy shit. Like talk about like, I want to do that right now. I want to add Striker to the S&P.
I'm already updating my Striker charts for the trade room.
I just want to do this. I just need to see it. I just need to see it. I just have to do it. Markets are closed. Maybe hopefully it didn't load in the data. So give me a second. I got to load Striker here. I don't know if it's got the data here. No data. Let's refresh the chart. Come on, striker. Don't do that to me now. There we go. So take a look at this. Okay. So like I want to talk a little bit about something. I'm going to split the auctions. This is for all you trade room guys in here. Okay. Okay. So remember, this is too small of an auction. You don't trade small value areas. Make sure they're large enough to take a profit. So upshifting auction. Okay. Look at that. Look at that. Look at where they stop it. Very low on a big striker level. Talk about Confluence. This is what we're talking about, guys. Do you guys understand this? It's interesting enough that this striker level is lining up with the low of the auction. Maybe there's a reason for that. Okay. Maybe there's a reason for that. I think we should do an AMA on using striker and auction theory, Jeffrey, because I think there's a big opportunity there for sure.
Oh, I've been waiting for this. No question.
Let's go in here. Let's add striker to the Nasdaq. Let's just take a look at the Nasdaq here for a second. Let's take a look at it. So there it is. So you see here, they didn't quite come down to test that one here, but this was right at the arbitrage level. But they did come into this one down here. This was the big one here. Right there was the big one here. Right there. Came right into it. Right now, they didn't come to this big one, but this one was right down at the arbitrage level. Interesting enough, right? It lines up.
Also, Sean, that's yesterday. So we don't know what the striker level was for yesterday. We only have 1 day.
No, but I'm saying is that striker level from today is lining up with yesterday's arbitrage. It's identical to yesterday's auction.
Yep.
So there's a reason for it, guys. There's a reason for it. Kirk Jones is the winner. Congratulations, Kurt. Congratulations. Lady Luck is on your side. Fantastic. Take a look at crude oil. Okay, let's go in and add striker. This is all of you striker traders and all of you trade room traders. We can get into this. Take a look at this. I'm here to tell you there is a reason it stopped right here on cheap locations. Right there. Right in front of the striker level. Okay. Now, obviously, that we're at the end of the day, so I wouldn't trust anything that's coming in for final auctions on crude because it's already past the pit close. But you guys get the point. Yeah, you guys get to the drift. Take a look at the Russell here. Take a look at the Russell. We add some striker to this. I'm going to show you how you can combine striker to the auction theory. Right there it is. Big trades. Let's split the auction. Make sure it's splitting. Auction just split. Take a look at what's happening right now. We have a split auction. Okay, I'm going to turn this off so you guys can see this. Let's just turn them display mode hidden, display mode hidden. Okay. I just want to explain a few things. So we're coming into cheap territory now. This is still a very, very tight auction. You see the size of this value area versus the size of that value area? Very different. So I tend to let this expand a bit. I like to let the value areas be a bit bigger. But if you can see what we're referring to, confluence of the auction, if you look at what took place, this was cheap today. This was where they stopped the market. This was the wall that was holding the market. And that's the whole point. And then they get up above the VWAP in an upshifting market. There was the test of that auction. There was the test of the shifting VWAP in an uptrending market with this. This is the whole point, guys, is that when you can piece together, the way I would go about this is the first thing I do is determine where is the cheese. What I mean by that is, am I cheap or am I expensive? Auction theory tells you how to trade every strategy. Let me repeat this so you guys can leave here with the biggest golden nugget that I can teach you in my life of trading. When I have an upshifting auction, that's a buyer's auction, which means I only want to be buying the market based on buy strategies. That's buying arbitrage, that's buying striker levels, that's buying the VWAP, that's buying everything relative to auction theory. Okay, this is the whole point of market profile. And when you understand that, this is interesting, is that we're in cheap territories right now. This is a really good trade in cheap territories. Very, very good trade. in cheap territories. Okay. And we're going into the close of the market, so don't take any trades, please. Don't do as I do. Don't do as I say, do as I do. Right. I hope you guys learned something from that. There's a lot. Market's trading, right? Market's closed. Yeah, the market's closed, if I'm not mistaken. Yeah. You've used TPO for years as a great update. Right. Yeah. Just a little bit. We're going to go over all of the settings tomorrow, what these are. If you look at, like if we just take a look at the S&P and we want to look at it on a weekly basis, we can just take a look at the weekly auction. This is currently the weekly auction, currently this week from Monday to Tuesday. And the whole reason of understanding, like you can see, like you say, well, why are we blowing through the VWAP? Because that's not how you should be trading VWAP. A lot of people look at monthly, weekly, and daily auctions, and they don't understand that VWAP is not meant to be a static variable across the entire week or day or month. It's about to be volume profile is relative to the current auction. So if I split this, take a look here and split this right here. Okay. If this doesn't split, then you will trade the VWAP as it's split. If it splits, you will trade the split. So this is why this worked. This here had a short, came above it, long, right? A little bit of a battle here on this. And there's a reason why there's a battle here, and I'll explain this, is because we're in a D-shaped auction. D-shaped distribution for the week. Yeah. Yeah. And that's why the market's trading here and it's going back up to it's interesting how the market went all the way to the weekly arbitrage. Like literally, this is the weekly arbitrage right now. Like that's why, like if you look at the S&P, they came all the way down today, right? Came all the way back up to where? The arbitrage on the week. Interesting. It's not science, guys. It's just volume and time arbitrage that, I hope everybody has a chance to learn. Right now, take a look at this. Like this is something that's unique, is that it split the auction. This is the current week, but this was the beginning of the week. So at the beginning of the week, it was here. And then as the market shifted all the way up and started trading, this auction shifted here. So this was the auction at the beginning of the overnight session, right? Prior, the weekly auction. And if you want to go and you just want to draw a little line in the sand, look at, if I extend, right? If I extend this all the way across and you look at the prior auction, okay? I'm going to draw a little line right here. They took it all the way to cheap on the prior distribution. Like, this is what I'm telling you guys. Like, when you understand that when I'm looking at this auction here, this is cheap, but so is this. And if they bring it all the way down, you get a base hit there, quick little bounce trade, and they want to take it lower. They take it to the prior auction. And that's the big kahuna trade. Everything below here is cheap. But if you're looking for trade setups and you're looking at, this is why I like to split the auction. Like the trade was here. I'm going to turn this off here, guys, so you can see this. If you're looking at bigger distributions are going to provide less trades, or they're going to be pretty big trades. On a 30-minute chart, that's a pretty big reaction, right? Like you're taking a trade here and it traded all the way up to here. But if that didn't want to go all the way back up and it got stuck mid-auction and it wanted to trade below, it could all the way down here and it took the lower auction. And that's the thing. Okay, it's a huge trade. Yeah, that's a big trade, but it's a big trade because it came down to cheap distributions in an upshifting auction. You got to remember, like, this is a buyer's auction. You say, well, how come they're driving it lower? They're driving it lower because the market is being manipulated to get price cheap. This is futures. Yes, Mac, this is S&P futures. Absolutely. Yeah. And though this is just looking at the day, you can look at it from a monthly perspective, and you can just look at the monthly auctions and just take a look at it, right? Like this is, I don't like to look at monthly auctions just due to the sheer fact that I don't trade that big of a horizon. I'm not really a monthly auction trader, right? I look at daily and I look at weekly. Yeah, dailies are here. Yeah. Yeah. We'll teach it all tomorrow, guys, in the trade room. Yeah, we're going to teach it all tomorrow. So type a yes that you got something out of this, that you're looking forward to joining us in the strategy sessions. Hopefully you enjoyed our session today. And I, as the CEO of the company, on behalf of all of the people that have worked behind the scenes to make this a reality, thank you. Appreciate your business, appreciate your attention and your attendance. Yeah. Appreciate you. Yeah. Everybody that's requested callbacks will get a callback, guys. And any veterans, just email Pete in the support. And anybody that's requesting callbacks, Jeff and my team will get in touch with you. Jason, thank you. Yeah, appreciate you. Yeah, put a lot of time into this, and I feel very passionately about this. Like, there's a lot of things we teach, but this is something that you can never overlook. Yeah, never overlook this stuff. This is very powerful information. Yeah. Traders, have a fantastic day. I'll see you bright and early. Hey, Kurt, you deserved it, brother. Thanks for picking me. We didn't pick you. Lady Luck picked you. We're the messenger. Congrats, brother. We'll see you in the morning. Take care, traders.